Welcome to Relay Chain, a podcast produced by Parity Technologies where we discuss all things Substrate, Polkadot, and Web3. Today on Relay Chain, we have Paolo Ardoino. He's the CTO of Tether and Bitfinex. Welcome to the show, Paolo.
Thank you very much for having me, Joe.
Yeah, so I want to start with like a quick background on you. You joined Bitfinex as a developer and you worked on a lot of like the technical backend integration of the exchange. Can you just tell us a little bit about your journey from starting as a developer to becoming CTO and kind of how this developed?
Sure. So yeah, I joined Bitfinex as a part-time developer on the backend side in late 2014. My main role was focusing on the matching engine. When I joined, the matching engine was doing something like 50 orders per second, and Bitfinex was a popular platform for crypto, and it also allowed margin trading. So if you handle so little orders per second, then the issue is that when there is high volatility, when there are liquidations, it becomes quite slow. My background is in scalable applications and decentralized applications. So I joined to improve that part and also to bring my knowledge to other aspects of the platform, like WebSockets integration, high performance APIs, and streaming APIs, because we had a lot of market data to offer to our customers. So in the first year, I focused mainly on the matching engine, so bringing from 50 to 5,000 and then 10,000 order per second. Was not great, of course, but was already multiple X of what we had. And then I started focusing more on the platform in general, on the backend side, to move from a monolithic backend to a microservices-based backend. I'm a big fan of the book The Cathedral and the Bazaar from Eric S. Raymond, that talks about how you should build modular and microservices-based architecture rather than trying to create something that maybe from the outside looks beautiful, but then it's extremely complex, and if you take down one pillar, falls all apart. So I brought that knowledge into Bitfinex, and we moved from having one GitHub repository to now today we have more than 500 small repositories with all the small microservices and so on. So in 2016, Bitfinex got hacked, and then the management decided to appoint me as a CTO in order to rework the entire security and bring the platform back up. So I did that and then and started building my own team that was then focusing both on backend and front end. In 2017, I became also the CTO of Tether. Also there, I mainly start focusing on bringing Tether from Omni, that was the main and only blockchain, that also the blockchain where we started from, to Ethereum, and then multiple blockchains. As today we have, I think, 8 different blockchains that we support.
That's actually interesting that you started out on working on like the data engine and matching stuff, because I got into crypto in, I guess like I started going like more full-time into crypto in like 2015, 2016. And it was because my background was in time series analysis of shock and vibration for satellites. And so I was very familiar with this. And I was more interested at first in going into like normal stock markets, if you will, and found that a lot of the APIs and data was really either inaccessible or expensive to get access to. And it was actually just a lot easier in the crypto world just to get access to some of these APIs and data and start hacking and tinkering and like start actually getting to go. So yeah, that you were kind of like 1 or 2 years ahead of me in pushing that advancement so that it was ready for me when I started going into it. Yeah, you said on an interview last year in April that you spend 90% of your time coding, even as CTO. Do you still do like a lot of coding?
Yes, I do. I believe that as a CTO, if you lose your passion for coding, you would not be as effective as you instead if you keep coding. So I like to build the backend with the premises that I talk about of microservices and so on. So the entire backend is now built on top of Grenache. That is a DHT-based microservice system that is extremely simple. If you think about it, it's like BitTorrent for microservices. And so I like small things, modular things that everyone can take and build on top of that. So I still work mainly on the matching engine. I am almost the sole developer of the matching engine. And although we have a great team that tests it and hammers it and as much as possible, and I'm almost still focusing on the APIs, so the WebSocket and high performance APIs. We are growing that team now, so hopefully I will mainly focus on the matching engine because it's already a big burden to be working on. But I believe that you cannot really understand as a CTO all the nuances and the complexities of your platform if you stop developing. Because yes, people can talk to you about those, can present you the issues in multiple ways. But if you don't keep up with new technologies, with developments of the ecosystem, you will eventually be a little maybe slower and less effective in your work.
Yeah, I mean, I'm not a CTO, but I agree that like when I'm kind of leading projects, you have to also be like at least spending some time in the weeds and really seeing like what's going on in the day-to-day and staying like up to date on what's happening in the code base. So I could talk about like the matching and all of this stuff all day because I think it's really interesting, but we're mostly here to talk about Tether. So if you want to start, like it's one of like the longest running projects in blockchain. It launched in 2014. And I don't know, were you there when it launched or did you come in to Bitfinex after?
So I came to Bitfinex after, and Tether even after that. So Tether was launched in 2014 from a group of visionaries, I would say, because now the concept of stablecoin is used everywhere. We are seeing central banks talk about stablecoins, regulators, everyone is talking about stablecoins. But in 2014, there was not such thing. And even more so, something that was pegged to the dollar and was using a blockchain as a transport layer. And the reason why the Tether team decided to create Tether was to solve one problem that I'm sure you're familiar with, that is crypto arbitrage or arbitrage in general, right? So if you are trading on a stock market, you trade Apple USD, right? Really, you buy and sell Apple against dollars. And the thing is that in traditional finance, both stocks and money move at the same pace. So they are all in custodian banks, in clearing houses, and they have it's just numbers on databases. So they will move at the same pace. So it means that when you trade a pair, right? And the pair is composed by two currencies. In crypto, you can think about BTC USD. So you have BTC, that's the first currency, and USD, that is the second currency. So you want really to have the two currencies that are moving at the same speed between venues. Because if you do arbitrage, it means that you want to sell Bitcoin where the price is higher and buy Bitcoin when the price is lower. But that means that you have to be able to sell Bitcoin where the price is higher and get USD, and move the USD where the price is lower and use that to buy BTC. But then if USD takes 1 day or 5 days, if you are doing an international wire, it gets crazy and you will lose all the opportunities. So this really simple idea was, well, why we don't create a dollar that moves at the same pace of Bitcoin? So Bitcoin was moving at one block every 10 minutes on average. So we looked to use the same technology, almost the same technology, to move dollars within 10 minutes. So at that time, there was only OmniLayer that was available and allowed creating custom assets. So we started using that in 2014, and that is when the journey started.
Yeah, so is that kind of like the main motivation for deploying on Omni, was just to kind of match the pace of Bitcoin?
Exactly. Well, there were not many blockchains that allowed tokens. so issuing tokens. So Ethereum was not really there. So it started a little bit later than that. So there was only Omni. Omni was also secured by the Bitcoin network, right? So you had that plus that was important. So all the other, because one important thing in blockchain is that you don't want to issue an asset on top of blockchain that is of which the value of the blockchain itself or the core asset of the blockchain is lower than the asset that you are issuing. So we were secured by the Bitcoin network that was the blockchain with the highest value.
Yeah. And I think we'll get into that principle in a little bit while when we talk about deploying to other networks. I want to start talking about like the future of Tether. And just one thing I want to note is that the New York Attorney General just came out with a statement about like a week before we were recording this. And I don't want to kind of ignore the elephant in the room, but I think there are lots of other people who are like more qualified to discuss this and have more background information. And I just want to focus on like where I can add to the discussion, which is like the tech, the features, the new products that Tether is launching. So I don't want to completely ignore the big story that's been in the media lately, but I just don't think I'm the best person to be adding anything to that. So I'm going to focus elsewhere. So if we start talking about like the future of Tether, since you guys launched in 2014, there's been a lot of other like stablecoin innovation that's come out. So like with DAI, these algorithmic stablecoins, and USDC has come out lately. So what kind of like innovations do you see like amongst your competitors? And then like, how do you look at them and plan to stay competitive in the next couple of years?
Sure. So you are completely right. There are many new stable coins that have been created over the years, especially after 2018. After the big boom of Tether in end of 2017 and beginning of 2018, we proved the concept. Because if you think about it, Tether until mid 2017 was not so big. Well, in beginning of 2017 was around $100 million. And in the end was almost $1 billion, if not exactly $1 billion. So we proved the concept. We proved that it's a valuable business, it's a great idea. And of course, this concept kept being proven till today when we are seeing more and more competitors. So in 2018, I think, or end of 2017, also the DAI started it, and I believe that's a great concept. I believe that, say, crypto-backed stablecoins are a really good value added to the sector, although I would prefer or would have preferred to not have these stablecoins adding centralized stablecoins, because Tether is a centralized stablecoin because it's relying on banks. As USDC, as Paxos, and so on. So there is a big differentiation between centralized stablecoins and decentralized stablecoins. So if you build a decentralized stablecoin, you should not allow as collateral, at least in my opinion, a centralized stablecoin, because there is always the risk that eventually the size of the centralized stablecoin, just because of the liquidity that is available on a centralized stablecoin, will maybe eat the decentralized portion. So there is the risk that crypto-backed stablecoins become a proxy or as a derivative of a centralized stablecoin. So I don't like that much, honestly. I would stay pure and not allow centralized stablecoins. Then there are things like Ampliford. That is a really interesting concept. We are in good discussions with their team. They did the token sale on Bitfinex now it's 2 years ago, and they are a really interesting. They have a really interesting approach. They adjust the issuance based on the price. So the idea is that they maintain the peg based on the price. So they use an oracle. So if the price is bigger than 1, they increase the issuance on chain. So really there's more inflation, so the price will go down. And if the price is below 1, then they will do the opposite. They will reduce it. So the basically prorated price will have eventually to go up, right? So it's a really good concept, and although we're in discussion because we are exploring how to possibly integrate something like that in an algorithmic Tether, there are still some user experience discussions that also have to be solved, because creating or changing the issuance on chain is quite tricky also from a user experience perspective. So That is another interesting point that, so stablecoin, that is another type of stablecoin that is worth mentioning.
And what do you see like as far as the breadth of the market? So like there's kind of US dollar pegged stablecoins, but there's a lot of other assets that have, I guess, quote unquote stable value, at least relative to themselves, so like euros or precious metals. Are you looking to stick like mostly in the USDT realm or kind of branch out to other assets with the same or similar services?
So we launched USDT and also we launched URT and CNHT. So we are looking to expand the offering on the fiat pegged stablecoins. The dollar is just a clear winner there. So Tether started from the crypto space, and the crypto space look at prices always in dollars. Of course, the more the industry will grow, we will see more euro adoption and possibly CNH adoption and maybe JPY. But for the moment, is still dollar is still the predominant currency in the crypto world. So also there, at least still 1 year ago, you had positive interests on the dollar. So it was easier to maintain and more profitable to use dollars as the reserve currency. And while euro had already negative interests, and the same goes with GBP and Swiss franc. So that is the first reason. And also with Tether, we issued Tether Gold, that is a precious metal backed stablecoin. And I believe this is one of the most interesting projects and has a really bright future. We are seeing an incredible interest around Tether Gold. So it started really fast. So we started it in 2020. And in this moment, the total market cap is already more than $150 million. And we are receiving additional interest from funds that are invested in precious metals naturally, but they are looking towards a better way to hold the precious metals. Because also, as it happens in crypto, if you don't have your private keys, then you don't own your coins. But the same applies with gold. If the vault is not yours, then the gold is not yours. So what we did with Tether Gold is to create, to work with Swiss companies that would allow us to keep the gold that is being issued to Tether Gold owners into these vaults. So we have full control and to audit, to check that everything is in order and so on. So we have direct control over the gold. That is not true for many gold token issuers, where they rely on the banking system to keep custody of the gold. So I believe that our approach reduce or at least remove one hop between the customer and effective gold storage.
I guess I have a question operationally. I mean, we think that, dollars move slow between banks because it can take 1 or 2 days to clear. When the orders come in for like Tether Gold, how do you actually like physically move gold to this vault? Like, how is that kind of managed?
The process is actually quite simple. So the gold price is fixed a few times per day. So when there is an order, the price is fixed, and the Tether Gold will request to buy an additional quantity of gold, so that then we can fulfill in few days the order of the customer. So definitely is not the fastest process, but also so there is a balance between speed there and safety, because of course the gold has to be delivered, has to enter the vault before we can actually issue the tokens. And that is really important. Also, I think that one thing that surprised me is that when we decided to create Tether Gold, I thought, okay, now there will be a huge volume in Tether Gold against USD or Tether Gold against BTC. But something that really surprised me is that the customers that buy Tether Gold are really doing that to hold it. They keep it as collateral, maybe on Bitfinex, or they keep it just on their Ethereum wallet, and they don't use it to trade it much. They just want to get exposure, and they just want to know that if things go south, they can request a redemption from and get it delivered in Switzerland. So the beauty of Tether Gold is that actually, if you have more than 430 ounces or tokens, really, you can get a redemption of a full bar, because we usually use bars that are 12 kilos, 999.9 of purity, and you can get a delivery wherever you want in Switzerland. And then from there, you can take it on. And we don't do international just because it just doesn't make sense, right? There is so much security, so much cost involved. So we do in Switzerland, and then is your job to take it anywhere with your respecting the regulations that you have to respect.
That's interesting, like a connection between the blockchain world and physical world. So I'm just wondering, because you have kind of a lot of this infrastructure in place with like having like a euro, gold, US dollar. And when Libra, now Diem, was kind of like announced a couple of years ago, I've kind of lost track on the timeline there, but they were proposing basically like a basket of currencies, basically like a special drawing right type of thing. Have you thought about having something like that that's like a managed basket, or are you still focused more on individual assets?
So I believe that users prefer a stable value. So it's quite harder to manage that to having a basket of currencies. You could ideally do that then using futures to hedge and maintain a peg, but it's a really operational complex. So I think that also was one of the mistakes that Libra made. So with the power of Facebook behind their shoulders, you really want to make sure that you can please the regulation where your main business is in. Because Facebook and Libra has a lot of power, so they can attract definitely a lot of money into their banks. It means that they have exposure to billions of users. So imagine a world where eventually Libra gets to $1 trillion or $1 trillion or $3 trillion and so on, 10. So it means that from one side, if you are the US, you will see part of the capital flow into other currencies because you have to keep the pool balanced or the basket balanced. And if you are Euro or Switzerland, you will see that again there is the risk that part of your asset will flow to another currency to keep the basket balance. So if the size was small, there is of course no problem. But with that type of size, there is a risk of to have an impact on the FX markets actually if you do baskets, and you actually might piss off multiple regulators rather than just one.
Yeah. So I guess that was a mistake they made of just drawing too many eyes to themselves, yes. Maybe. And so like with that, with regulation, there's been a lot of changes in the last couple of years. Like a few months ago, one of the US agencies ruled that banks could custody crypto assets. Like what kind of regulatory trends do you see, and how are they affecting the stablecoin market?
So stablecoins are under scrutiny of regulators and central banks. I think that centralized stablecoins are using the banking system, so it's completely fair to see regulators and central banks look into it, both from a technological point of view, but also from an anti-money laundering point of view, and so on. Right. So if you're using a technology, if you're using really the banking network, you have to respect the same standards. There is no other way around. So. That is why, for example, Tether has functions in order to freeze funds on chain to cooperate with law enforcement. We do it quite openly. We communicate when we do. Also, we did that to help many projects. There was an exchange hacked, I believe, more or less 6 months ago or 1 year ago. I don't recall when. We helped them to freeze $30 million worth of Tether. There were many DeFi projects that were hacked, and we worked with law enforcement to freeze those funds. So that is what is happening in the banking world, right? So if someone steals funds from your bank account, the signatory bank has the right to freeze your funds if you've stolen funds. So we had to replicate the same functionalities in our decentralized stablecoins. That is something that decentralized stablecoin should not have and don't need, because they don't use the banking system. We do, and we have to respect that. So definitely there is increased scrutiny, but also there is scrutiny, but also there is a lot of collaboration. So most of the people think, okay, there are regulators will regulate stablecoins, but what actually is happening is that both with law enforcement and regulators, there is a lot of positive talk. So they reach out, we discuss about how this entire industry works and how we see that growing in the future and so on. And of course, central banks are interested eventually to use this technology to issue a better version of their already digital fiat currencies. Because currently fiat currencies are already digital, so there are numbers on databases. But here's the thing: these databases are completely inefficient. So I before joining Bitfinex, and I come from traditional finance world, and when I work with hedge funds, with banks, was completely a mess trying to reconcile the numbers. So you were using tabbed text files that were coming at midnight, and then you have to reconcile numbers. There were errors. Then you had to contact the custodian, trying to understand where the error is coming from, and so on. Imagine if you can use a blockchain that actually shows the same numbers and does not have conflicts across all the different banking venues. That will save a lot of money, energy, time to everyone. Will make the entire banking system more scalable and much less error prone. I'm not saying that I believe that banks will not use public blockchains, or at least will not use public blockchain, but maybe they will use an existing blockchain, could be Polkadot, could be Ethereum, and so on, as their base layer to run their interbank operations. That is fine. But also, I believe sometimes there is the confusion that banks are or central banks are going to issue their stablecoins, so privately issued stablecoins will not have a future. And I believe that is actually incorrect. I believe that central banks will issue their stablecoins. They will issue their stablecoins to replace their currently outdated and terrible interbank settlement system using a private blockchains. And then privately issued stablecoins instead of receiving wires through ECH or SWIFT or whatever, banks where the centralized stablecoins are banked will just receive funds through wires that are really settled through the private blockchains at which the banks are connected to. So it's just different transport layer, but same thing. The idea that the central banks will issue directly on Ethereum or Omni or Polkadot is quite unrealistic. So it's just a change of settlement layer, while the scope of privately issued centralized stablecoins will be serve the public consumption, public blockchains.
Yeah. So moving into like kind of this next level of like having a bunch of blockchains. You started on Omni, you deployed on Ethereum in 2019, but now there's a lot of new deployments coming out. So Polkadot, Lightning Network on Bitcoin, Layer 2 networks on Ethereum, maybe some other blockchains that I don't know about. How do you look at like your decisions about where you're going to deploy? And I guess specifically, and you mentioned at the beginning that like, the security of Omni was tied to the security of Bitcoin. And now when you start talking about deploying on multiple layer ones, these all have different security guarantees. And so how do you look at that in the context of your entire issuance across multiple blockchains?
Sure. There are a few requirements to have Tether issued on a blockchain. So there is, of course, the security is the critical one. So we look at the security in terms of audits, of centralization with different nuances, because we are also on blockchains that are more centralized than Bitcoin or Ethereum. We look at the tooling. So we want to make sure that the blockchain, the base layer of the blockchain, and the asset issuance layer are both audited by multiple firms. We want to make sure that there is accessibility to multisigs. So the entire multisig, the entire issuance and redemption, freezing and freezing process has to be handled by a multi-sig approach, and the signers should have access to hardware wallets. So these are the security components that we care about. Then the other aspect is the business side. So we want to make sure that the blockchain itself has enough interest from the community, right? There is no point of doing all the research, all the effort, then no one will use your stablecoin on that blockchain. So the efforts that a blockchain foundation does in terms of growth is one of the other really important factors. And of course, yes, security and adoption are really the two important parts.
Yeah. So how does interoperability fit into the roadmap? Because like if you start to get Tether on all of these different blockchains, you kind of end up with a scenario where maybe somebody has Tether on blockchain A and they want to use it to do something on blockchain B, but they don't have Tether there. And so they might have to do this kind of like convoluted, send it here, change it for this, and then change it back to Tether, but on a different form and move it here. And like, so how can interoperability make a better user experience for people? And what are kind of like your design goals in like, or like the opportunities that you see in this specific domain?
That's a really good question. So first of all, the reason, and this is again another innovation that other stablecoins are trying to copy us on. In 2018, after we launched on Ethereum, we realized that blockchains are a little bit, I'm not sure if you are familiar with, but with Linux distributions wars, right? So when I was a kid, there was Gentoo, there was Debian, Slackware, Red Hat, and so on. And you had these forums, and everyone was every Linux distribution fan was hitting on it, trolling the others, right? And I was really liking Gentoo because you could compile everything, and I was trolling some Slackware users, and that reminds me a lot of blockchains, where you have different communities that sometimes troll each other. We are seeing Bitcoiners with Ethereum holders and vice versa. And the connection there is that in the Linux distributions world, the common tooling was, or the common ecosystem was Linux kernel and the GNU ecosystem. So we thought, okay, why Tether shouldn't be the common stablecoin or the common asset across all the most popular blockchains. So all these communities will need the same tools. We need the same liquidity. We'll need the same access to liquidity. And that was Tether. So Tether is actually in multiple forms a common good across all the most popular blockchains. So this idea really made the success of Tether. We issued on Ethereum, on Tron. Tron has at this moment more or less $15 billion issued on Tron, right? And Ethereum has more than 20. And we look forward to see a lot of value from the current blockchains flowing to Polkadot. Because the more there is adoption in terms of community growth on a specific blockchain, the more Tethers will flow there, because there just will be more liquidity, more usage, more genuine interest. And traders will want to use blockchain that will support also DeFi, so they can easily withdraw from a centralized exchange and send those Tether to a DeFi project or to another exchange that support deposit from Polkadot, for example. But actually, if you think about it, exchanges are the perfect conversion venues for Tethers across multiple blockchains. Bitfinex is a good example. We support all the blockchains that Tether supports. So you can deposit Tether on Ethereum, and you will be able soon to withdraw Tether on Polkadot, or you can deposit Tether on Omni. You can withdraw Tether on Algorand, for example. So that also, we have seen OKX and Huobi and KuCoin supporting recently other blockchains like Tron. I believe that like Algorand and so on, they will definitely support to other blockchains because Tether blockchains, because it just makes sense. You give more freedom to your users, you'll gain traction. you also will be able to save a lot in fees. Imagine to have Tether on Polkadot that can be moved across trading venues and does not cost $100 that either is being paid by the trader or is being paid by the trading venue. So it's extremely annoying in this moment. And we are processing thousands and thousands of transactions per day. So you can quickly calculate the cost for us as a trading venue or the cost of that we have to apply to our traders that just want to withdraw their funds. So supporting multiple blockchains also will, from the exchanges, makes the entire infrastructure much more resilient. We have seen many times where a blockchain gets clogged, a blockchain becomes, maybe there is an upgrade that creates a temporary issue in, the consensus rule. So for some reason, there is no blocks will not get confirmed, and then you can route the entire traffic to another blockchain. So supporting 3-4 blockchains by Tether blockchains by the exchanges is just a normal thing, and we are seeing more and more adoption in that sense. And there are also projects that are acting like proxies. So they are basically just keeping a balance of tethers on multiple blockchains, and they're just swapping one with another. So it's given the liquidity of Tether that is now 36 billion and is growing by the day, it makes it easier for venues to keep balances in supporting multiple blockchains and then swapping from one to another.
Yeah, these are almost like what you're describing kind of sounds like these blockchains are different jurisdictions, and the kind of like venue that's sitting in the middle to kind of like take, a deposit in one and withdrawal on another. It's almost like a TransferWise type of service where they have like bank accounts in multiple different jurisdictions, and they just, assume that the funds flowing one way are roughly equivalent to the funds flowing the other way. But it would be great to do that in a decentralized way also. And so like, as you've kind of alluded to, like Tether is going to be deploying on Polkadot. And can you talk a little bit about what motivated that specific decision and the opportunity and future you see for Tether on Polkadot?
Yes, definitely. So, given that Polkadot is an extremely well-known blockchain and has all the security requirements that we talk about, the other aspects, as discussed, is the community potential and the growth potential. And Polkadot is probably the most exciting blockchain that came out in after 2020. So we are seeing a lot of interest from Tether users and Bitfinex users in Polkadot. So it just made sense, right? So Polkadot is seeing a lot of adoption and interest from DeFi projects. So the fact that you have these parachains make scalability almost intrinsic in the system. So you don't risk to easily end up in a situation where to swap funds on a DEX on Polkadot, then the operation will cost $100 in fees. So you can issue context-wise parachains, you have parathreads and so on. So it really makes things scalable natively. So I really like that. I like how the tech has been made by the Polkadot team. And really is just what people tell us. So if there is interest from our users, there is interest from us. So it's really important as CTO of Tether to be able to listen to communities, to be able to judge objectively a blockchain by its merits. And I'm really pleased to announce that Tether will be on Polkadot as soon as the first parachain will be live.
Yeah, that's actually a parachain that I've been a little bit involved in myself, so I'm quite excited to see it launch. I think we'll wrap it up there. Paolo, is there anything else that you wanted to talk about, or a place to direct people to look for more information?
I think that I have really to thank you for this nice chat. I like that it was quite technical, so not always happens. So thank you very much for that. And I really thank you for having me today here.
Yeah, thank you for joining. Thanks for listening to Relay Chain. We'd love to keep in touch. Follow us on Twitter @RelayChain or email podcast@parity.io. Our team at Parity includes some of the leading peer-to-peer networking developers, consensus algorithm inventors, blockchain innovators, and Rust developers. If you want to learn more about our work or want to work with us, visit our website at parity.io and sign up for our newsletter at parity.io/newsletter.